I was able to turn $26 to $250 with this step in the strategy that I am about to show you now. Yes, so don't skip this video, watch it to the end so that you too will start making money like this. The risk management is there. You need to understand that this $26, I can either lose it or multiply it times 10. So that is the game. So my risk management is intact. So watch how I was able to trade and make this money like this. Just so you know, guys, before I get started, know that you are going to make money using this strategy if you follow the right pattern that I'm going to teach you. Honestly, your risk management must be intact. I'll quickly drop these rules before I show you the strategy. Your risk management must be intact. That means that you should risk a certain percent of your account. A certain percent of your account. You can't just bring a $500 account and risk everything on one trade. No. So it's either you follow this my method whereby I deposited just a little money that I can afford to lose, which is $25, and try to grow it, multiply times 10x, or I lose the whole 25. You get? So risking small to gain big. That is what I'm trading. You can see I took this buy right from this point right here. Look at where I took the buy from, and then I enjoyed it up to this area. So you could see my stop loss was just under here before. So this risk to achieve this, so this is like 1 to 10 weeks to reward. You understand, guys? So that is basically the system. So you have to understand that risk management. Don't bring a huge amount and risk everything. I'm trying to explain these things so that everyone will make money. So I assure you guys, you're going to make money to the glory of God using this strategy. You can see the evidence is here that I am making money with it. So I'll soon be closing this trade as soon as it's showing me a sign that it wants to come back to the downside. You can see my stop loss is here. I'm definitely going to move my stop loss here because I expect this other block to hold it. So I'm going to put my stop loss under here. If it goes below it, I close. It was a win trade. So let's get started, guys. So first thing, you need to apply these special indicators for you to use it on step index to make money like I'm doing now. So now the first indicator, you just need a moving average. So you click on the indicator data, this F here. You can see this F. Click on indicator data. Go for moving average. Just remove this 2 because I want to use period 3. Set your period at period 3. Shift should be 0. Shift 0, method exponential. Then apply to, we should be applying it to typical price. Then ignore the levels. Ignore time frame 2. It's all time frame. Make sure it's set on all time frame. Then the color, we can use yellow for this. So it's already on yellow. So you click done. So this is the indicator we just applied. So we are going to add another, say moving average. Click on add moving average. Then period 60. Period 60. Shift 0. Method, put it on simple. Apply to close. Ignore the levels. So we will be needing another color. Let's use green. There's no green. Okay, let's use green. Then you click done. Okay, so another indicator again, moving average again. Then set it on period 7. Period 7. Shift 0. Method simple. Apply to close. 3 pixel for the color. This is 1 pixel. This is 2 pixel, and this is 3 pixel. Right? Then for the color, let's use red. So you click done. Guys, let me just say this before I forget. Indicators still works. I'm not gonna lie. People do say indicators don't work. Indicators still work. The reason why you say it don't work is because you are not applying it with risk management. Technical analysis also hits stop loss, so it still works on that probability. Price action, I mean to say, price action also do hit stop loss. Same thing goes for indicator. If you check, after I'm done with this, we'll be able to do a lot of examples, and then you will see some that works and some that fails. So your risk management, your risk to reward is what will make you profitable in this game. So let's go. So the next indicator we'll be adding is the stochastic. So you click on add, then you look for stochastic oscillator. So there's the stochastic. So just set it like this, or the K period, the period, the slowing, they all should be 1. Just the exact setting you are seeing on my screen. Simple as it is, just this exact setting. Click done. So this is it. Then one more indicator we'll be adding the Ichimoku. This is it. So make sure you set it as 9, 26 and 52. Then 4 pixel for it. This is it. 4 pixel. This is 1 pixel, this is 2 pixel, this is 3 pixel, and then this 4 pixel. You can use the color blue. Then for all this, leave it at 1 pixel, and make sure it is the color of your screen. If you're using a dark screen, put black for these colors. Then you click done, right? So it's now like this. And then one more indicator, moving average, put it on indicator window 1, please do that. But also, guys, we can also do with that indicator. Not very important. So let's just ignore it. You see how these indicators are on my screen. Now, how does it work? I will show you. First thing you need to look at for before you even want to take a trade is this green moving average. Is it crossing above the chart or is crossing below? That's the first condition. This strategy requires 3 conditions to work. So that is for you to see how effective it will be. It needs 3 conditions. So it will have a good win rate because of this. So the first condition is wait for the green moving average to cross below the chart. If it crosses below the chart, it indicates it want to buy. If it crosses above the chart, it indicates it want to sell. So wait for the green moving average to cross above below the chart. It indicates a buy. That is condition 1 met. Come down to this Ichimoku, this blue Ichimoku. Is it currently at the oversold level? Listen, guys, from 20 below is oversold level, and from 80 above is overbought level. So when something is at oversold level, it is expected to go up. If it's at oversold level, we're expecting it to buy, and if it's at overbought level, we're expecting it to sell. So this is the second condition, which says that it should be at oversold level or close to oversold level. So if it is at oversold level, you can now consider second condition met. So what this means is that the first green moving average has crossed below the chart, indicating a buy. Coming down here, this blue line at the time of this intersection, tracing it down, the blue line was at oversold level. So what does that gives me? Second condition met for the buy. Then third condition comes here is that the yellow moving average should be above the red moving average. These 2 moving average here. I'm going to make that very bold so you can understand what I'm saying. So let me use this as my cursor. This yellow moving average is above this red moving average. That is condition 3 to take this trade. So this way, I haven't seen these whole 3 conditions, I could boldly take my buy and enjoy it all the way to the upside. So the moment it enters overbought level, what do? You close your trade. Simple as this. Simple as this, guys. Simple as this. So I could take my buy from here. And then I could take my profit from here. Right, guys? If you notice, I'm just leaving just this one position. I've already closed the bigger position. Just leaving just this one position, which I'll close any moment from now. So you understand, guys? So right now, that is for the buy. Now for the sell, if you can see, this green moving average has crossed above this chart, right? And then what here? This is as overbought level. That's the second condition. And the red moving average is above this yellow moving average condition for a sell. What do? You sell. What's market doing? Coming down for that sell. So when this market reaches oversold level, you close. You go again for the buy. So let's assume you were here. So just so you can see this thing works, guys. Just so you can see it works. So let's assume you were here 7th of October. You took what? You took a sell from here. Why? Green moving average crossed above the chart. And then here, what happened here? At overbought level, you sold. You enjoyed it all the way down to oversold level, which is 20. So the moment you reached here, you close. So you sold from here, and then you took your TP here, right? So where is another beautiful example again? You can see green below the chart, and then oversold, you bought, right? That's just it, guys. In as much as it happens, so let's not just go for only in the good side. Let's look at for when it went against. Okay, as at this point where this intersection happened, let's trace it down to see if it was at oversold level. This is above 27, so you can't take this trade. This is 27 above 20, so you can't take that trade. You cannot take that trade, definitely. So we want to try to look for where did this strategy go wrong. So when some people don't follow the strategy very well, they come and say it's not working. This is an intersection where the green moving average crossed above the chart, indicating a sell. When you trace it down, look at the intersection, tracing it down like this. This is 50. You can't trade it because it's not at oversold. It's not at overbought level, right? So when they both align, it works well. Once they both align, it works well. Except you did not follow the rule of the strategy. So this is an intersection crossing below condition 1. Condition 2, red, yellow moving average above red, good. So let's check for condition 3. When this intersection happened, tracing it down, guys, tracing it down, price was at 25. So you won't take this one, even though it went in. Sorry, that's not it. Where is it again? Okay, this was the one I took. So another thing I want to teach you is your time frame. Also, you can also interchange time frame. Interchange your time frame so that you will also get. You can see this was 5-minute time frame, exactly the time frame I took this trade from. First condition, yellow above red, green cross below. You can see as it crossed below, as I just noticed this crossing happening, I took a buy from here. And then this guy, what's it called, the Ichimoku below at the oversold level, I took that buy. So if you take a buy from a lower time frame, you can also monitor it from a higher time frame. For example, as at this point, 15-minute time frame was trying to cross. 5-minute time frame was trying to cross. But if you go to 1-minute time frame, you will see that it has already crossed, right? So somebody who wants to catch an early entry we'll take this trade from 1 minute time frame. So you took a buy from here. You can see these are the early bets now. Taking the buy from here, this was exactly what I did. Taking the buy from here, I mean all conditions met, oversold level, and then price start firing up, right? Went to 5 minute time frame to see the same thing. Seeing that 5 minutes is intersecting, you can see 5 minutes is still telling you that I have a long way to go. Going to 15 minute time frame, giving you the same condition. All 3 time frames telling me it is a buy. So what I'm trying to explain here is that, guys, 1 minute time frame, use it for this strategy. 5 minute time frame, use it for this strategy. 15 minute time frame, use it for this strategy. And trust me, you will enjoy it. Look for a low. For example, as this intersection happened, I put my stop loss under this low. So that was why I could take this trade from here, risking less to gain more. Always put your stop loss under a low. For example, I'm buying from here, I'm putting my stop loss under this low because this low is acting as a support level. So I expect that support to hold price back from coming down to touch my stop loss, and then you enjoy the way. So keep on practicing this strategy and use it to make money.